This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Hello everybody, welcome back. So I'm just going to put something into context for everybody today, because it's a new month or whatever, so we'll see daily volatility, of course we will, and blah 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 blah. Captain Noobmaster's always got his face glued to the screen, waiting to see which direction it's going to go so we can FOMO in. But I want everybody to stand back a little bit from these charts, or at least from the daily or the crack trading chart of the 1 minute time frame, right? So I'm going to think about this. I want you to think about this in terms of investment, okay? So again, I'm not here to shill anything or want you to click on anything particularly, although I do enjoy little clicks here and there. But I want you to think about an investment, right? I want to think about up-only charts. So it's not just Bitcoin. Bitcoin is an up-only chart, despite obviously this is only a young chart here. This is only the Binance history, but we all know that Bitcoin has a very good, I think it's the best up-only chart, right? And then you get everybody talking about inflation. Oh, inflation's the problem. CPI print came through hot. Yeah, it came through a little hot. No big deal. Let's stand back. Okay, we're thinking about up-only charts. S&P, Nasdaq. I don't know. Visa. All the up-only charts, right? Microsoft, Apple, blah blah blah. Up-only charts. Things that only go up over time. Investments, right? Long term. And I say long term. I'm just talking about a few years or so. Why have they all gone down? They've gone down because inflation was high, okay? So what's happening at the moment? Inflation's coming down. Why is it coming down? Because we're raising interest rates. Yeah, fair enough. Okay, so borrowing costs more. Fair play, fair play. So that means people have less money. No big deal. Less money to stimulate the economy. Fine, that's no big deal. Let's have a look at inflation, shall we? And again, I've shown you this quite a few times, usually as we lead into a CPI print or a Fed meeting or something like that. I always bring this chart back up. This is Trueflation's independently verified. Through the Chainlink Oracle, again, Chainlink, if you want to get a bit of that, that's a decent long-term up-only investment in my opinion. But outside of that, and again, I'm not your financial advisor, so don't shoot me here. I'm just trying to put things into context. So a year from now, inflation was running pretty hot, 12% in America, no big deal. No big deal. All right, what are we now? Okay, so we're half that. We're more than half that. We're down to roughly, we'll just call it 6%, because that's what the government say. The official government statistic read is 6.4. The Trueflation, they've got it down to 5, we'll call it 5.2, right? And remember, this is more up to date. CPI, the government CPI is a bit of a lagger because it goes on previous months. It's not day to day like this is. And again, this is independently verified. It's not real. But what we're looking at, even if you get 6.4 or 518, doesn't matter what you're looking at. What we're looking at is a strong downtrend. Okay, strong. It's very strong. More or less, give or take, 50% reduction in inflation in the US economy, right? Fair enough. Okay. All right. So let's just say, all right, it took 12 months to get to this point. So if with this kind of trajectory and the Federal Reserve doing their quantitative tightening and raising of rates, let's just assume that 12-month period from now it'll be down by another 50%. That'll bring us down to, let's just say, 3. Yeah, just above 3. If we're going by the US official government reported data, or if we're going for Trueflation, we'll be down to 2.5, which is actually 2.5 is where they want it to be. Even if we're down at 3, they're still pretty good. They'll probably hold it there. They'll be happy with that. We'll all be happy with that. It's a different story over in the UK. I can tell you, it's not. We could only dream of a charter that looks like this. In America, that's where that's what matters, and America's economy is doing pretty well, all things considered. They don't live in Europe, obviously. We've got problems over here, but anyway. So what I'm trying to put across to you is that, all right, if you're an investor, you try and think ahead of the game, right? You got to think like a chess player. You don't just move a pawn around or hope for the best, like Captain Noobmaster does when he trades these charts. Captain Noobmaster is a pawn pusher. That's what he is. He doesn't think ahead. We've got to think ahead. An investor would think ahead. Now, where are we going to be in a year when it comes to inflation? Probably at an appropriate level, whether it's 2.5 or 3% or so, thereabouts, give or take, another 50% reduction in inflation from where we are right now. 12 months from now, then, basically, it would appear that with that kind of thought process, or that kind of current trajectory and expectations, that inflation will be a forgotten issue. The raising of rates will be gone, and if anything, they'll have paused and maybe even looking to lower rates, depending on how they feel the economy is doing anyway. Remember, the Fed, just like all central banks, have a superpower to stimulate the economy, and that means that they can lower rates whenever they choose. But you need to have higher rates in order to lower them. Remember, we've been sitting around at almost 0% interest since the pandemic kicked in. Your superpower's gone, all right? That's it. That's Superman bathing in kryptonite right there. There's nothing they can do. So we've got higher interest rates now. That's fine. That means that the superpower has been brought back, and the Fed can actually start to lower rates in the event that something happens with the economy. They need to stimulate it again. They need to print some money. That's fine. Okay, lovely. But anyway, what I'm trying to put across to you is we got to think like a chess player here. We got to think, leading into next year and the year after that. We all know about the 4-year market cycle for Bitcoin, and if that's the case, then we're beginning a new cycle, a new uptrend, a new bull market is what we're thinking about. The previous bull market looked like this for a long time. So this is your bear market end. This is a bull market beginning, but basically what we saw was a range basically from the absolute lows to the breakout level of around 400%, but really we spent most of our time within a 300% range, and that's being generous. Really, most people, including myself, will have bought around these levels, between 4 and 10, which meant that we spent about 18 months within a range of about just less than 200%, about 181 range. That's the majority of the bull market, and right there, up, down, effectively sideways, and yeah, we'll just call it annoying, shall we? We'll call it annoying. But that is considered to be all part of the bull market that we were within. This is part of the bull market. This is how the bull market ended. That's how they always ended in the past. All the previous cycles ended like that. They're like this, and then they end like this. Because when Captain Noobmaster finally wakes up to the breakout, he gets his granny, he gets his great granny, he gets everybody to fill his pockets so he can keep these green candles from going up. And we have allocated ourselves in the boring portion of the chart, because we recognize, like a chess player, that if you're a pawn pusher, you're likely to lose. These are all pawn pushing moves. We have basically strategically played the game, and although it has been a bit annoying for the most part, we win in the end. That brings us to where we are right now. Okay, so this looks now very much like it did around here. So we are likely, in my opinion, just based on the chart, to have a new high based. Just that's how it looks to me. Generally speaking, it looks like that in the short term. Again, trying to take the short term out of this, and I'm talking short term right now. I'm talking like a month or two. We're likely to see a new high on this. It just seems more reasonable than not. But we're trying to think further ahead. Like I say, 12 months from now, inflation should be dealt with, completely conquered, and then the year after that, real confidence and money starts to pour back into the system. Because the buzzword at the moment is Fed meeting, CPI. That's the buzzword at the moment. That's what people are afraid of. All of that will be forgotten history 12 to 24 months from now, and the only thing that will be here will be Captain Noobmaster going pump it, pump it, pump it. On a fundamental level, we've got things like Coinbase, BlackRock wanting to create, and probably will achieve, this bull run, a spot ETF. That means more actual Bitcoins taken off the market. That's what helps create green candles. That would just be their spot ETF. There could be more spot ETFs. Not only with Bitcoin, there could be some with Ethereum. There could be ones with Web3. There could be all kinds of spot ETFs. The market cap of crypto very likely to find a new high, which previously was 3 trillion. We might even be looking at 3 trillion for Bitcoin alone. Again, this is all very speculative, but I'm trying to ask you to place yourself a year from now and 2 years from now, more importantly, because 2 years from now we'll have had a whole 12 months where inflation and Feds and CPIs mean next to nothing, and only really the charts at that stage are the more important things. And we all know what it was like if you were around these periods here. This was a standard bull market kind of run. It was emphasized by the quantitative easing and lowering of rates, obviously, but it was always likely to end this way. And then people like Michael Saylor and Elon Musk all started talking about buying Bitcoin, and led to this run up here and blah blah blah. That's where Captain Newmaster really gets. I had lots of people I know personally. This is where you know that you're reaching a peak. You know, people who weren't interested in crypto whatsoever hear about Elon Musk or whatever, talking about crypto, and then they say, "What's this crypto you've been doing?" And at that point, it's more or less time to start selling. The time to really start buying is when everybody calls you an idiot, and the confidence is low, and people fail to recognize the situation that we're in, which is a 4-year market cycle, very likely to be already in a bull market phase. Remember, the bull market can be very boring for a long period of time, even though it is technically a bull market. And obviously the inflation is a major problem, because it's not just it hasn't been a bear market just for Bitcoin. It's been a bear market for everybody. This is your S&P right here, very very neat bear market, to which I believe that this is the bottom. I've been saying this since we were down at these levels. Looks to me like that idea is still in play. Either way, I'm trying to put it to you that we're looking to see year on year upside potential, and if we were to be conservative about this but just realistic, we would expect a new high on Bitcoin, and from this current level maybe we'll be looking for another 250% gain, so less than 100,000 for Bitcoin, which means that year on year overall on average we're looking for about a 300% gain, so between 250 and 300% over the rest of this bull market phase, which would be another 2.5 years. And again, that incorporates from this level to whatever the peak would be. And so we're talking between 250% gain overall. We'll call it 100% gain each year. And again, this is on average. And most people will look back and go, I don't want 200, or I don't want 300% gains. That's rubbish. 100% a year. No. Well, actually, that's pretty good. Yeah, that is what's known as a first world problem. Complaining about doubling your money every year. That is a true first world problem right there. You have to stand back and think what it is. What am I complaining about, to be fair? What is it that I'm complaining about? Yeah, it's not massive crypto gains. I'm being conservative here. It's not massive crypto gains, but it's decent gains, all right? Where else are you going to get 100% return on your investment each year? And I don't mean this time next year you'll have 100%, although you could quite easily. I mean, by the end of this 4-year cycle, you'll have had about 250 to 300% gain from where you bought it today, if that's what you chose that you wanted to do. So that is a bit of a rain check on the situation. Bitcoin is an up-only chart. There's many up-only charts out there, and we all know that inflation and CPIs and Fed meetings all have played into this bear market, which is perfectly fine. We're assuming that a year from now we'll have another 50% reduction in the inflation, so that means that will be done and dusted, which means that the year after that will be a significant one. We're talking 2025 basically, and that fits very nicely to a 4-year market cycle for Bitcoin. So just in the very short term, I know people talk about, and I've spoken about this 200 exponential moving average on the weekly. So the 200 weekly being our main area of resistance at the moment. Fair play, that's true. Big money investments will not likely pour into anything while being below that. That is a line in the sand for anyone who wants to deploy large amounts of capital. That's fine, but it's got an upward slope on it. It's a massively lagging indicator, right? So this also means that even if this does and is our resistance, which it currently is, let's face it, currently is, it's still not a big deal, because with this current state of events right now, this isn't going to start to have a neutral or negative slope for quite some time, which means that the resistance is actually going to be higher and higher as the weeks unfold. And then once we reclaim that, prove it to be fully reclaimed and supported above, then that's when confidence will really kick back in. And this chart will be fashionable once again. Look, I'm not here to say that this is risk-free. Certainly is not risk-free, but there's a model that can be overlaid onto this that can be applied, same as it did for all the previous bull markets for Bitcoin specifically. We've also got a trajectory for inflation to suggest it's going to keep coming down. Forget about the slightly higher than expected CPI data that came through last month. It's the trend which is the most important thing. The trend doesn't appear to be reversing as far as I'm concerned. There's no reason for it to reverse, to be fair. And unless, of course, some geopolitical event takes place that can't be foreseen on the charts, of course. And guess what? The Fed have got higher rates, haven't they now? So they can bring that down again. They've got their superpower back to an extent. So that's fine. That's what they want. They want to be able to pump money back into the economy if and when they need to. So it's not the end of the world right now. It's actually fine. So stand back from the charts. Don't be a pawn pusher. Think about it in a broader context of where am I going to allocate? Why am I going to allocate? What's my expectation? How long roughly am I looking for? Yeah, it's going to be a bumpy year. Might be even a bumpy 18 months from now. But 2 to 3 years from now, I will have achieved my goal, which is going to be a year-on-year 100% gain, give or take. And to be fair with you, you know, it is conservative, but I'm not here to be a moon boy. I'm not here to tell you that you're going to make tons and tons of money. I'm just trying to put it into context. I'm a realistic trader. This is how I make my living, basically. So I'm just trying to put it to you that from an investment standpoint, it seems reasonable, even at this current level, that this is a decent enough place to invest for a long term. But don't expect to be rich when you wake up tomorrow, or even, you know, a year from now. Just think about it realistically. There's a model here. There's also a trend for inflation. There's also expectations that all of this will be fully resolved and we'll be back into full gear in about a year to 2 years from now. And we'll be seeing new highs on this chart. And it's at that point there, like I say, that most people will actually be buying it because that's how people are. I love people. Like, don't get me wrong. I'm not slagging anyone off. I like Captain Noobmaster himself. He's the one who fills my pockets at the end of the day. But this is for you as well, Captain Noobmaster. I want you to just stand back and just think about what it is that I've said. It's very realistic. It's a very realistic expectation what I've just said now. And you've got to be able to conquer your emotions. And if you're going to be buying here, you can't be looking at the chart next week, a month from now, even a year from now, and questioning your overall goal. And your overall goal is not to be rich immediately. It's not even to be in profit immediately. No one buys the bottom, no one sells the top. What you do is you slice decent portion of price action in between, and what we're seeing now is a rinse and repeat carbon copy of previous bull market, at least just the last one. And on top of that, we recognize that inflation is the major driver of the downtrend in all markets. And then if that's the case, then we recognize that there is a strong downtrend when it comes to inflation, which means that it's getting better every month, and certainly a year from now it should be completely dealt with, which means that the year after that, yippee-ki-yay, we'll be going straight back up and probably find a new high. It might not be a fantastic high, might not even be, you know, $100,000 for a Bitcoin, but it's likely to be higher than where it is today, which means that you actually win in the end, and that's the goal. Anyway, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Feel free to leave a comment. Tell me if you think that this is a realistic approach for investment, and if it is, tell me if you've set up a SwissBorg account where you can stake it, or you can stake it across all platforms or wherever. Where are you buying it? Where are you staking it? Because that's what you want to do if you're an investor. You want to be buying and staking. And right, I'll leave it with you there. Have a nice day. Take it easy.